A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a crucial meeting last week, President Trump made a clear and straightforward request to Federal Reserve Chair Jerome Powell: lower interest rates. As the Fed prepares to announce its next interest rate decision today, the likelihood of granting the president's wish appears slim. Economists estimate a staggering 96% chance that the central bank will maintain its current benchmark rate of 4.25% to 4.5%, a rate that has remained unchanged since December 2024. This stability comes as policymakers strive to combat inflation, which has shown signs of resurgence. The ongoing tension between the Trump administration and Powell has escalated as the president has openly criticized the Fed's reluctance to cut rates, arguing that lower borrowing costs could stimulate economic growth. However, experts caution that such cuts could also exacerbate inflation, which has been a persistent concern in the economy. The backdrop of this debate includes the looming threat of tariffs, which Trump has imposed, potentially leading to higher consumer prices. Powell, who was appointed by Trump in 2017, has defended his cautious approach, asserting that there is no immediate need for rate cuts given the current economic indicators. He has emphasized the importance of maintaining a balanced monetary policy, especially in light of the unpredictable effects of tariffs on inflation. As the Fed convenes this week, all eyes will be on the Federal Open Market Committee, FOMC, as they deliberate on the interest rate decision. The committee, which consists of 12 members, will vote on whether to cut, raise, or maintain rates. Recent statements from FOMC members indicate a split opinion, with some advocating for a rate cut while others argue for a wait-and-see approach. Economists have pointed out that the current economic landscape is characterized by steady growth, with the Commerce Department reporting a second-quarter GDP increase of 3%, significantly surpassing forecasts. Despite this positive growth, inflation remains a pressing issue, with the Consumer Price Index rising to an annualized rate of 2.7% in June, exceeding the Fed's 2% target. The Fed's upcoming decision is crucial, as interest rates are a primary tool for influencing economic activity. A rate hike could discourage borrowing and spending, while a cut could stimulate the economy but risk igniting inflation. The Fed's cautious stance reflects a desire to preserve its ability to respond to future economic challenges. Powell's press conference following the rate decision is expected to address the political pressures surrounding the Fed, particularly Trump's comments about potentially replacing him. As Powell navigates these waters, he will likely reiterate that the Fed's decisions are guided by economic data rather than political influence. Looking ahead, many economists anticipate that the Fed may consider a rate cut in September, with a projected reduction of 0.25 percentage points. This potential move would align with the Fed's strategy of maintaining flexibility in its monetary policy. Overall, the upcoming FOMC meeting is poised to be a pivotal moment in the ongoing dialogue between the Trump administration and the Federal Reserve, with significant implications for the U.S. economy and its trajectory in the coming months. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.